Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, so what does this all mean? We know that President Trump, as you said, said he would move to ban institutional investors from buying single-family homes to address housing affordability. So let's see what Jeff Langbaum has to say about that. He's Bloomberg Intelligence Senior REITs and Commercial Real Estate Analyst. He joins us from BI headquarters in Princeton. Happy New Year, Jeff. Good to have you back here on Bloomberg Businessweek Daily. Yeah, what's your initial take off of what we got from the president? Not a lot of details. We'll see where it lands, but your initial thoughts.
Well, my initial thought was that I assumed that once he posted something separate about the defense companies, that this would already be out of the news cycle, but I guess that's not the case. It remains to be seen what exactly he can do, and then really what the impact of that will be. I don't think that he can just outright ban companies from, private market business, but he certainly can, push Congress to try and do something. He can push the regulators to try and do something. He can push the DOJ to investigate business practices. I mean, there's a lot that he can do to make life uncomfortable.
I was just going to say he can't ban private companies from doing a certain business, but he can make it very difficult for them to exist through a series of things. I mean, we've seen this happen with certain individuals too that have come to the administration's ire or been the administration's ire. So talk a little bit about what would happen to a company such as Invitation Homes. I mean, we're not talking at this point about that company no longer being able to do what it does, which is buy and manage rental homes for people around the country.
Well, all we have right now to go on is the language of the Truth Social Post, which specifically said would ban them from buying more homes. So the portfolios that they have now theoretically wouldn't be touched. The questions revolve around whether you can build homes, whether you can buy portfolios of homes that were built specifically for the intention of renting, as opposed to buying individual previously owned homes. But if at the end of the day, these companies that are largely grow by buying new rental homes, if they're prohibited from doing that, that takes away a big part of their growth engine. And then, it raises the question of whether there's a viable business model there if the government is anti-institutional ownership of rental homes.
Yeah, and you just wonder then what's next? What might they not want institutional investors to buy next? But Jeff, how institutional investors, how many homes do they really own? What percentage of the housing stock that's out there?
It's a tiny part. I've seen somewhere along the lines of 2% of the overall housing stock owned by large institutions. And the two REITs you mentioned, Invitation Homes and AMH, where that's their sole business is owning rental homes, they're a small part of that. So, another way to look at it is Blackstone obviously got beat up a lot today. They were very early in the business. They still have an investment in it. But not only is it a small part of the overall housing stock, it's a tiny part of their overall business. Mm-hmm. So it's not nearly as big a problem as you would think based on this being the proposed solution. But clearly there's political points to be won by talking about improving home affordability and going after the big private equity guys.
Well, Jeff, that's what I want to ask you, because when we talk about, we can tell now we've got midterms, right? And to be fair, we should be talking, many would argue, about affordability for a lot of Americans that are having a really tough time and cannot afford a home. What is the real reason that Americans can't afford a home? I mean, I'm just curious if you've come across anything in terms of your research.
Well, mortgage rates are still high, and that has a compounding effect. Obviously, it increases the cost to buy any home, but it also precludes people who have a low mortgage from selling their home, because then they're going to have to roll it into a higher one. And so, inventories of for sale housing are the stuff's not selling, and prices need to come. Mortgage rates are going to be the primary driver of that if rates come down. But this, solution may not even wouldn't even necessarily do what he wants it to do, because just like in some cases rent control, rent caps, while it sounds good and it sounds like it's going to reduce pricing, it just it's part of it stifles new construction, and you could see that happening here depending on how exactly it shakes out. Some AMH, American Homes, their sole expansion business right now is building new homes for rent. If they're precluded from owning those types of properties, you're going to have less construction, and less supply means doesn't necessarily mean lower pricing.
I just want to go to some data points here. Yeah. Mike McKee sent me this earlier. Sent me this report from the American Enterprise Institute. They argue that the market share of institutional investors is less than 1% nationally, though there are 22 counties, which is 0.7% of counties, that have a percentage as high as 5 to 10%. I wonder if the concern from the people have, and this politically seems like a very populist thing to do and thing to say, conflates the idea of institutional investor with the idea of a landlord who's also an investor, because it does say that 25% of homes in the first quarter of 2024 were actually purchased by investors of all sizes. So it's sort of a narrative issue here.
It's definitely a narrative issue, but there's a bunch of different components of it. We talked about how the large institutions don't own a lot of these homes. They have been a large buyer of homes over the last couple of years, but recently they haven't been, because homes aren't for sale. The pricing doesn't work. For somebody who's an economic buyer, where you need to get in at the right price and be able to charge a rent to generate a return, the pricing hasn't been there, and the transaction activity has actually been pretty low. So there's a lot of different angles that you can look at this and wonder whether or not actually would accomplish what it sets out to accomplish. But it does sell. It sells the point of working for the someone who's looking to buy a home but can't afford it, at the expense of the big institutions with all the money, and it's that inequality issue that I think is trying to earn political points.
Jeff, just to be fair, and just got about 20 seconds, is it safe to say that investor money, also institutional money, provides funds to build homes? Just quickly.
Sure, and it's unclear whether his post didn't address that, but it's unclear whether the target will go towards institutions building in addition to buying.
All right, good stuff. So glad we could check in with you. Jeff Langbaum, he is Bloomberg Intelligence Senior REITs and Commercial Real Estate Analyst, joining us from BI headquarters in Princeton.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We turn to Bloomberg News corporate and economic statecraft senior reporter Joe Doe right here in studio. The seizing of the sanctioned oil tankers, the U.S. energy quarantine of Venezuela, that along with the U.S. planning to control future sales of oil from the country, and then taking in the money and splitting it between the U.S. and Venezuela. What is that about? What is the kind of end goal here?
So
who benefits by all of this?
It's unclear. You have an extraordinary action taken by the United States of America as a direction by President Donald Trump to remove President Maduro from Venezuela, quite literally, remove him, which in normal times would seemingly leave some sort of a vacuum. But we did quickly see the vice president step in and take over. A
friend to the oil industry, as we know.
Right. And the question has been, what do we do with the oil? What do we do with the natural resources? The real question is, what about the oil, right? And we've seen all the actions that you saw play out. What we've seen in the 4 or 5 days since is a lot of, here are the ideas that we have over how we're going to handle the infrastructure of the oil. And we've been talking to oil majors like ConocoPhillips and Exxon and Chevron, but it's a lot of talk. It's not a lot of clear action.
How does it typically work when it comes to natural resources? You've spent years covering metals and mining, for example. How does a split typically work when it comes to natural resources when a company that is maybe from another country goes and extracts those natural resources from a different country?
There's all sorts of different things. There's like, you have taxes. So like, okay, you have to pay a certain amount of tax, like nickel in Indonesia, for example. Years ago, it used to be the Chinese would just extract nickel out of Indonesia, bring it back to China and process it. The government got smart, call it 12 years ago, and said, okay, well, the value add is the processing. So you can continue to extract, but you also have to process within the nation. And so there are certain fees or taxes that go along with that, so that the state can actually say to its taxpayers, to its citizens, we are making money off of this as well, even though it is an extractive industry. Thinking of it this way is a fair way to think of how different nations work with foreign corporations that are in big extractive industries.
Well, let me ask the question in a more extreme way then, because I think there would be some people who perhaps are watching or listening right now saying, okay, well, if this is if this oil is in Venezuela, it belongs to Venezuela and its people. What right does the United States have to take that oil?
Right. I think there are a lot of fair legal, philosophical arguments that are probably ahead of us. I think that's a really important thing to point out. Like, this is uncharted territory. And while it seems like a plan is being developed by the United States and by Venezuela and by others, it is not clear what that plan is. Obviously, we hear the energy secretary saying today, well, it's going to be split and it's going to go into U.S. accounts, and we'll kind of oversee those accounts and make sure the money gets to who rightly should be getting that money. But like, how are they going to execute that?
So that $2.8 billion at current market price of the 30 to 50 million barrels of oil from Venezuela to the U.S., we're not saying like half of it goes to the U.S. government. I mean, doesn't Chevron own it, or who gets that money? Because it sounds, that's where I think people are saying, is this transactional?
Right. Chevron
by
is
the
the
US
only
government.
oil major actively operating in Venezuela right now.
Correct.
The reporting that we had today was that there are talks to try to get ConocoPhillips and Exxon back into the country to also help develop the oil deposits. They're talking about everything from developing to infrastructure. I mean, we have quoted one of the Rice University professors who says, to do this, we're talking like $10 billion a year that has to be spent to build this out. And then your question is, but okay, say it happens, who's getting the money? Well, it's hard to understand. If the energy secretary is saying it's going to be split, there are obvious questions in the market that you are asking right now. How does it get split? What do those accounts look like? Who actually controls them? Like, the question I have is, the United States president currently has a golden share over United States Steel. He has shown that he will, on certain things, have direct say, one individual. And so does he said, I will take these accounts. So will he? I don't know.
I want to, roll into this Greenland, because we did have the president talking about that. European leaders issuing a joint statement warning that President Trump needs to respect the territorial integrity of Greenland and Denmark. I do wonder, it almost feels like, is this kind of like the British Empire that the U.S. is looking to be in terms of natural resources? Or is that the wrong read on it? Like, how do you see it? Like, again, and I go back to, is this transactional? The president wants one thing, going to get it, and then back off.
Here's my read on Greenland. Greenland is part of the Western Hemisphere in our national security strategy. Venezuela is part of the Western Hemisphere in our national security strategy. Questions came up to the president over the weekend. If you're doing this with Venezuela, what about other things? And the president mentions Greenland. Greenland has not been discussed by the president of the United States since the summer.
Right.
It was striking that he brought up Greenland, and we've seen all the news that's come out. The Danish officials who have said, whoa, whoa, whoa. The points that, hey, if the United States launched an attack on Greenland, that would effectively end NATO. I think we need to pump our brakes for a second, see what plays out. We do know that the president of the United States sometimes is a little bit loose with his words. But behind his words, there is some meaning. And I think the market's trying to find out, what is that meaning? I think European officials are trying to figure out, what is that meaning? And I do bring it back to connecting the dots. The president is not telling us directly why he's talking about Greenland. But there is a connection of this is part of the Western Hemisphere, and he just had in his mind a massive victory of extracting the president of Venezuela and apprehending him, bringing him back to the United States. So on some level, don't forget, Greenland has always been a priority for President Donald Trump. It's just that lately it hasn't been at the top of the pile.
It's just fascinating. And I just want to say the news fast and furious. We do have a headline crossing. President Trump will not allow dividends buybacks for defense companies. Oh. So an interesting development there as well. And I'm just looking at Lockheed Martin, for example. It just dropped about 1% here. So the defense sector now also on our radar. Jojo, thank you so much. I know we'll be coming back to you because this story certainly continues.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Tim, we're going to stay in Venezuela.
Yeah, and what's needed to make this country viable, if that's the goal of all this U.S. action? For that, we welcome Francisco Rodriguez, Senior Research Fellow at the Center for Economic and Policy Statecraft at the University of Denver's Joseph Corbell School of International Studies. He joins us from Denver. Professor, good to have you on the program. You write in Foreign Affairs about Venezuela after Maduro. The current government, it's still the former government of President Nicolas Maduro. The acting president is Delcy Rodriguez, his vice president. Is this current government, is this current setup good for Venezuela and its people?
Well, the question is, what's the alternative, and what was the U.S. Willing or able to do? What we saw over the weekend was the extraction of Nicolas Maduro, but not a regime change. The regime remains in place. What would have been necessary to change the regime? That would have been a very different operation. The U.S. would have had to carry out a land invasion of Venezuela, would have had to occupy the country, it would have needed to get involved in state building, and the U.S. clearly decided not to do that. So then it has to deal with the authorities that actually have control over the territory. What the U.S. is trying to do is to say, well, what to those authorities, what you're going to do is going to be circumscribed by the pressure that we're putting on you. We'll allow you to sell your oil under certain conditions, but you have to comply with what we're asking you to do. For example, you can't sell the oil to China. You have to sell it to the U.S. or you have to transfer it to the U.S. in some way.
Professor, is it notable to you that there aren't necessarily humanitarian elements that are tied to this? That's something in the past that we've heard about nation building, the idea of democracy, the idea of human rights, those sorts of things. We don't necessarily see that.
There's humanitarian and democracy. There's one problem in Venezuela is that this country has undergone a massive economic collapse. It suffered a contraction of 71% of its GDP, the largest ever peacetime economic contraction in world history. And this country has been under a blockade of oil exports by the U.S., a total blockade for approximately 1 month. And this country depends only on oil revenue. That's its only source of revenue to fund its economy. So we could be looking at a situation in which the economy suffers another major humanitarian crisis, another major economic crisis, and we have migration outflows, we have food shortages, we have quite possibly a famine. Then there's another issue, which is the issue of human rights and democracy. The U.S. government has not talked about human rights. It hasn't talked about democracy. Secretary Rubio said on very vague terms, well, after we stabilize the economy, there's going to be a transition that's going to be done by the Venezuelan people. But this is very vague. There was an election. It was won by the opposition last year.
Right.
But that doesn't seem to be part of the plans of the U.S. government to bring this into the picture.
Yeah, I guess I just do wonder, is energy, a focus on energy, really the path forward to creating a sustainable economy in Venezuela longer term?
Well, I think that right now you have to worry about the short term more than the long term. So the Venezuelan economy.
So is oil the answer short term? Because we've all talked about the infrastructure.
It has to be. The Venezuelan economy has more than 90% of its exports have been oil for the last 110 years. You're not going to transform this overnight. This country is in the midst of a massive humanitarian crisis. What you have to do is recover the economy with the anchor of that economy, which is oil. Venezuela used to produce 2.5 million barrels. I'm not talking about ages ago. I'm talking about 2015. Before sanctions were imposed, it was producing 2.5 million barrels. Now it's producing around 900,000 barrels. That is the driver of the Venezuelan economy. You have to increase that oil production, and that has to generate royalties and revenues for the Venezuelan state so that it can fund public spending, so that it can fund imports of basics. This is a country that does not produce enough food to feed itself. It buys that food with the revenues from oil exports. So those oil exports have to be directed primarily at making sure that Venezuelans' basic needs are met.
Francisco, we've only got about a minute left, unfortunately. I mean, what actions by the U.S. will actually help the company? Do you agree with what they've done so far is big steps forward and will put the country on the right path to economic viability?
Well, we're not sure what they've done right now. I mean, we know that they invaded the country and took out the president, but we're not sure what it is that they're doing in terms of this oil deal. The only point is that I want to make is that this money has to come back to Venezuela. This money has to be able to fund the functioning of the Venezuelan economy. Otherwise, you're going to have a massive humanitarian crisis. And what's going to happen is that millions of more Venezuelans are going to show up in other countries and ultimately in U.S. borders unless you stabilize the Venezuelan economy.
All right, we got to leave it there. Thank you so much. Really appreciate it. Francisco Rodriguez, Senior Research Fellow at the Center for Economic and Policy Research at the University of Denver's School of International Studies.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Hey, let's get to it with Geeta Ranganathan. She's Bloomberg Intelligence Senior Media Analyst. She joins us from BI headquarters in Princeton, New Jersey. All right, Geeta, let's go to just the nuts and bolts at this point. So Warner Brothers rejecting this amended takeover from Paramount Skydance. I mean, is it just increasingly looking like this is a deal that's not going to happen, or is it just Warner Brothers saying, show me the money?
It is a case of show me the money, Carol. So the $30, obviously, we've been through this now a gazillion times. It's just not going to cut it with David Zaslav. He obviously wants something higher. In fact, he almost, I think, kind of lays it out in the letter that they sent, the board of Warner Brothers Discovery sent to Paramount Skydance. So they lay out something like $1.79 a share that they would need to be compensated for terminating the agreement with Netflix, as well as, kind of going good on some of the financing costs. So they obviously do want Paramount to raise the offer. We're thinking it needs to be raised to at least $32 a share to kind of bring the Warner Brothers board back to the table.
So what's the next move then? Does Paramount Skydance come back with more money or with a different deal structure?
So I don't know if the different deal structure is actually going to work, Tim, because that was what they did in the December 22nd amended offer. So one of the big points that Warner Brothers Discovery had raised initially was that, that they were talking about whether Larry Ellison and the Ellison family was actually personally guaranteeing the bid. They did amend that. They did raise their termination fees. So they addressed some of the concerns. But I think Warner Brothers is really looking for a sweetened bid. And of course, as you just mentioned a little bit earlier, they are talking about very, very high leverage, kind of again pointing to the uncertainty with the deal, basically just indicating that they need to be compensated for all of that risk and uncertainty. And they talk about like the difference between Paramount and Netflix, Paramount being, a $14 billion market cap company versus $400 billion for Netflix. So just kind of talking about the quality of the companies. Again, it all comes down to David Zaslav's deal-making skills. I think they're absolutely top-notch. I mean, we've seen this company go from $7 a share to, what is it now, $28. So
well done.
He is going to try. Yeah. So he is going to try and extract as much as he can. But definitely, they need a sweetened bid, though.
With any investment, though, you got to know when to kind of say this is good enough. What I'm curious about, though, Larry Ellison, I'm looking at Rich Go on the Bloomberg. He's worth about $245 billion. So, but a lot of that, I think, is tied to shares. And we know some
Oracle ownership,
right,
specifically. Exactly.
What I'm curious about, though, and we know, Geetha, that media deals can have a lot of leverage. But again, going back to that, Paramount is about a $14 billion market value company. You were just talking about this. And this acquisition, we're talking about almost $95 billion of debt and equity financing. Is that is it too much? Is it manageable?
It is way too much. Where we're talking about something like 7 to 8 times leverage. That's the pro forma gross leverage ratio that we're going to be looking at if this deal were to take place, which just basically puts the combined company at a lot of risk, right? So all of their cash flows, all of their EBITDA will basically go towards debt financing. So it really definitely puts too much pressure, which is one of the points that Warner Brothers Discovery keeps raising. And any company with a huge amount of leverage and with a declining EBITDA profile, well, that's not a good situation to be in. And that actually, we've seen that actually play out with Warner Brothers Discovery itself, which when the deal was announced with the Warner Brothers and the Discovery companies coming together, they had, promised something like $14 billion in EBITDA with over $50 billion in debt. That never really happened. The EBITDA fell short by something like 50%. And so that's kind of the risk that we run in this case as well. Although one can argue that there are synergies and all of that good stuff. But again, David Zaslav only knows too well what the problems are with too much of leverage.
Okay, Geetha, while we have you, I want to talk about Versant. Shares down another 6.5% today, down about 25% just in the last 3 days. That's when it officially began trading as an official spinoff from Comcast. It's the parent of MS Now, CNBC, and others. You have a note out that says you think the legacy challenges will remain in overhang. A sale or combination with other cable networks seems inevitable. Is this just a little stopping point or a holdover until this is part of some other company?
Yeah, I think, the writing is on the wall, Tim. I mean, we've seen this now play out for years and years where, we had legacy pay TV assets, especially the cable network business, really in secular decline. And what we thought was kind of this drip of this whole melting ice cube has now kind of turned into this avalanche. And that's exactly what we're seeing even with Versant. Because if you just, kind of heard their projections for EBITDA, we're kind of looking at about a 10 to 12% EBITDA decline year after year. And that is really what is reflected in those multiples. I mean, this is a stock that should, just kind of given its debt profile, the fact that it has a really clean balance sheet, the fact that there's visibility into affiliate fees, should be trading at least at about 6 times just based on historical multiples. It's trading right now at less than 4 times. So just again goes to reflect all of the uncertainty and the nervousness that investors have about assets like this. So yeah, there's absolutely no doubt that this needs to combine, needs to be part of some bigger umbrella, maybe Discovery if, that's the Netflix deal goes through and they actually spin it out.
That's what I was
a lot.
Can you imagine?
Right. Because
a lot of fear.
Well, part of, I mean, does that something like that maybe happen then, Geetha? And just got about 20 seconds.
Yeah, if Warner Brothers Discovery kind of keeps pushing on this Netflix deal, one of the things they're really hoping for is then that they do, that they are able to kind of spin out that TV network business. And then, of course, that then becomes a major roll-up vehicle for, Versant, for other cable network owners.
Amazing, as always. A must-read research on the Bloomberg Terminal. Geetha, thank you so much. Geetha Ranganathan. She's Bloomberg Intelligence Senior Media Analyst.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.